Moving on, Equity Group Holdings PLC has announced a half-year profit after tax of 29.6 billion shillings, marking a 12% increase from a similar period in the previous year. The company's total assets grew by 6% to 1.75 trillion shillings, while deposits rose by 11% to 1.3 trillion Kenya shillings. Equity Group CEO Dr. James Mwangi highlighted the group's strong liquidity and reduced leverage as key factors in their positive performance. The company's regional businesses contributed nearly half of its total assets and profit before tax. Dr. Mwangi said the bank's shareholders' funds increased by 13% to 220 billion shillings, supporting new investments and opportunities. The group's interest income surged by 22%, while its non-funded income also saw a steady increase.
We've reported net profit after tax of 12% with a balance sheet growth of 6%. That really informs Equity's focus on the market. We've been looking to really intermediate and support customers. The rate cut by Central Bank of Kenya is also quite encouraging. As Equity today, we've announced that we'll be reducing our rates going forward, which we expect will be able to spur the economy going ahead. From contributions, our subsidiary in the DRC continues to outperform our expectations. The subsidiary grew 22% year on year, and we're increasing lending from that aspect. But we really believe that our big subsidiaries in Kenya, Uganda, and Tanzania will follow suit as well.
Before the shock, the interest rates in US, what we could have called the Fed rate, was at 0.1, 0.25 highest. Today we are talking of 5.5%. So that created the massive volatility in exchange rates, demand, supply constraints. Now, if you look at the region we are operating in, Kenya is the most integrated with the global economy. So the country that received the greatest shock in the 6 countries we operate in is Kenya.
Moving on, John Mbadi, the newly appointed Treasury Cabinet Secretary,